Every successful trader I've had the opportunity to work with has directly or indirectly addressed this particular mindset insight that I'm going to share with you in this video. And conversely, every single unsuccessful, inconsistent trader that's caught in the boom and bust cycle that does really well for a week or two and then gives it all back hasn't addressed this particular mindset insight or this mental model. They're not aware of it. They don't have it in their trading plans. So what I wanted to do in this particular video is, for those of you who have a system, you have an edge, but you're struggling to consistently execute on it. You're struggling to have consistent profitability despite trading a trading strategy that you know works. I want to give you this mental model, this mindset insight. I want you to put it into your trading plan and into your processes, your trading processes before you take a position, and just see what happens to your results over the next month or two. Okay, and what we're going to do is we're just going to get straight into it. This is something that is more of a recent discovery through my own performance coaching work and having a look back over my last 7 years of trading and having a look at the most successful traders I've worked with to see what that differentiating factor is. And what I've come to realize is that a lot of traders do have trading strategies, or they have trading plans that actually work because they're in communities where traders are successful with those strategies. Yet it's the trader themselves that struggles to execute on it and get consistent profits with that particular strategy. So what I've done over the last few months is I've zeroed in on that moment just before you take a position. You have a trading plan, you forecast the position, and the market's presenting an opportunity to you. Now that decision that you make just before you take a position, that little few seconds before you take a position, becomes the most crucial time in terms of your trading psychology to ensure that you're actually executing on a trade that's in alignment with your trading plan. What I've seen is that the best traders, the master traders I call them, have a process, or they have something in their trading plan that guides them just before they take a position. Whereas amateur traders are run and they're confused and they're scattered, and their mind is run by fear and greed just before they take a position. The master trader is poised, they're patient, they're present. The amateur trader is completely scattered. They're run by fear and greed. They're emotional in those few seconds before they take a position. And what I've come to realize is that that few seconds before you take a position is the most crucial time as a trader. And it's the most crucial time where you have to be the most on as a trader psychologically to ensure you're actually making a consistently profitable decision in that moment. Share those recent discoveries with you and give you an insight into what the best traders are doing versus the not so good traders. So you can take this, you can implement into your trading plan, and you can see a difference in your results because of it. Okay? Now the big problem we're addressing is variance in your decision making. It's the variance you have in that few seconds before you take a position in the markets. Because what variance is going to do is, sometimes you have an edge, you have a trading plan. Sometimes you're going to take a position that other times when you're feeling a little bit differently, you wouldn't. And it's that variance in how you feel, and it's that variance in your decision making that ultimately disrupts your edge. It means sometimes you're going to over risk on a position. It means sometimes you're going to get into a position too early. It means sometimes you're going to take a position that isn't even part of your trading plan if you're in a variant state of greed. Whereas if you're in a variant state of fear in your mind, sometimes you're not going to take a position that's part of your plan, that's part of your edge. So whether we have variance towards fear or we have variance towards greed, we're going to disrupt our very edge. We're not going to execute in our trading plan, and we're not going to have consistent profitability. Okay? And this is the very thing that this YouTube video is going to address. I'm going to give you the insights, I'm going to give you the tools at the end of the video to ensure that you can manage variance. And that every time you come to the market, you're actually making a profitable decision and you're actually taking a trade that's in alignment with your trading plan. But first, we must understand the problem, we must understand on a deep level, and then I'm going to give you the solutions. So, how can you expect consistent profitability if you're not consistently executing on your trading plan on your edge? Think about that for a second. You can't expect consistent profitability if you're not consistently executing on an edge on your trading plan. And how can you expect consistent execution of your plan, of your edge, if you have variance in your decision making? You have an edge, you've discovered or you've created that edge, you've tested it. That's step number one of consistent profitability. You've put that trading plan into a mechanical, you put that edge into a mechanical trading plan so you can come to the market every time and consistently execute on it. Now you've managed fear and greed so that you're not run and you're not disrupted with variance in your decision making before you execute on that position. That's step number 3. Step number 4 of consistent profitability, structuring your life in a way where you consistently can show up to the market and you can execute on your edge without variance, without being run by fear and greed. But you can't expect consistent execution of your plan and as a result, consistent profitability if every time you come to the market, sometimes you're feeling extremely elated and you're more happy to take on risk, and sometimes you're feeling incredibly depressed and you're not willing to risk in that moment. It's that variance and state of mind that's going to disrupt you from actually executing on your plan and ultimately having consistent profitability. And this is what I've seen disrupts traders, and this is what stops traders from breaking through, breaking out the boom and bust cycle and breaking through to consistent profitability. Because sometimes you're feeling fearful and as a result you skew risk. Risk is all of a sudden much bigger than what it is in your mind. And then sometimes you're feeling greedy and you skew risk. And as a result, in your mind, risk is less than what it actually is. So it's fear and greed that skew risk, and it's that risk, the perception of risk in that moment, that leads to imbalanced or variance in your decision making. And you're not consistently executing your edge because sometimes you're fearful, sometimes you're greedy. I hope that makes sense. Let's go and understand this on a little bit of a deeper level, understanding variance in your psychology. If you've taken previous losses and you're in a state of shame, right? You've beaten yourself up, you think you've done something bad, you're now in a state of shame, that's going to project forward into a future fear of those things happening again, of taking another loss, for example, and you're going to be fearful in the market. Now, in those situations where you're fearful in the market, you will skew risk to exaggerate how bad risk is in that moment. Because of that fear, because you don't want that to happen again, you're going to have an avoidance of risk because in your mind it's going to be greater, the consequences of risk are going to be greater than what they actually are in your mind. Now, in those situations, in that state of mind, that could stop you from taking a position that's in alignment with your plan. Think about it. If a trade, the market presents an opportunity, if you're in that state of fear, in that state of perceiving risk as much worse than what it actually is, that may actually stop you from taking a position that's part of your plan. Whereas if you were in a state of mind where you were balanced, you would take that position, but because of that variance in your psychology, you're now not taking a position that's in alignment with your plan. You can see how that disrupts your edge, how that disrupts consistent profitability. Now, if you've taken a previous win and you're in a state of pride, that's going to project forward into a future greed, a fantasy. You're going to be greedy in the market. You're going to want more. You're going to want more of that pleasure you've perceived to experience in the past. And you will skew risk. Risk will be much lesser than what it actually is. And you're going to be happy to discount risk because you're addicted to that pleasure. Maybe you're a bit blinded to the risk through confirmation bias because you want that pleasure again. And in those situations, in that state of mind, you could take a position that isn't in alignment with your trading plan. You could get into a position that isn't in alignment with your trading plan because of your perception of risk in that moment is much lesser. So in both states, fear, greed, pride, shame, right? It's the pride of winning in the past, the shame of losing in the past that projects forward into a future fear and a future greed. So if we don't address our judgment of winning and losing, and we're not aware of our expectations before we get into an actual position, that means we're going to skew risk in those moments. Risk is going to be greater than or lesser than what it actually is in our mind. And as a result, we're going to have variance in our decision making. We're going to sometimes take positions that aren't part of our plan. Sometimes we're not going to take positions that are part of our plan because of the variance in our decision making. That's going to disrupt our edge, and that's going to disrupt our ability to have consistent profitability. That's what we're putting solutions in place for now. What I've seen is the best traders have solutions to manage that. The unsuccessful traders are run by that. They're not even aware of it. So by being here watching this, you're going to have an awareness of it, and then plus the solutions. Let's go into them. So how do we manage variance in real time? How do we have an awareness of in this moment I'm skewing risk, and I want to ground that, and I want to come back to my trading plan and just trade my trading plan. Because once you've learnt to ground variance in real time, you can go back to your trading plan and you can awaken the logical parts of your brain, and you can ask the question, is this trade part of my trading plan or not? If it's a yes, you take the position. If it's a no, you don't take the position. As opposed to being run by the emotional part of your brain, your amygdala, and being in this fear and greed response. So, traders must learn to be aware of the types of decision they're making in real time. You must be aware in this situation, am I making an outcome-based decision because I'm run by fear and greed in the virtual market in my head? Or am I making a process-based decision because I'm present with the real market, I'm present with what the market's actually communicating to me, I'm listening to the market, and I'm executing because it aligns with my trading plan? You have to differentiate between those two different types of decisions. The way you do that is by utilizing the Bulletproof Your Mindset tool. This is a free tool I've created for traders. It's in the link in the description or in the first comment. And by downloading that tool and watching the theory lesson I put with that, it's going to help you have an awareness of what type of decision you're making. And it's going to help you have more stickability to your trading plan and to your processes. And it's going to help you over time. You're going to develop the muscle. It's going to help you be aware and ground outcome-based decisions that are run by fear and greed. Because when you're caught in the virtual market in your head making outcome-based decisions, you're run by fear and greed, and you have an enormous amount of variance in your decision making. But once you learn to address that and ground the expectations in real time, and you learn to get present with the real market, now all of a sudden there's no variance in your decision making, or the variance in your decision making has gone less and less, and you've learned to manage that. And now you're more present with the market, and you're making decisions because they're in alignment with your trading plan. So the question to be asking yourself through the Bulletproof Your Mindset tool is going to help you do that. It's going to help you ground all your expectations, your thought process, and then you're going to become aware, is this decision an outcome-based decision because I think the market's going to do a certain thing? And am I run by fear and greed? Or is this a process-based decision because it aligns with my trading plan? I'm present with what the market's really communicating to me, and I'm making a decision because of that. These are important questions to be asking yourself. Now, these expectations, or being caught in the virtual market, or having variance run your trading, these are all a symptom of a deeper root issue. And I mentioned it before in this little video, but if in the past you have all these experiences where you think winning is good and losing is bad, and you've defined winning as good in your mind and losing as bad as a trader, think about that for a second. Think about the hypocrisy in that, because as a trader, to be consistently profitable, you have to both win and lose. Winning and losing are both part of your probability model. Winning and losing on an individual trade are both part of being a consistently profitable trader. So the question is winning really good and is losing really bad? Well, no, both are essential in the ultimate end goal of being a consistently profitable trader. So to judge winning as good and losing as bad, in my opinion, is very it's hypocrisy, because both are essential. You need both. You need both winning and losing to let your edge play out. So what's more important is you learn to redefine what winning and losing mean to you, so you can start transcending the outcome. And the roots of variance go deep into your subconscious mind, because as a trader, even deeper than that, in sport or through going through schooling, etc., we learn to associate in our mind things to winning and losing. We can associate pleasure to winning, and we can associate pain to losing. And in our mind, in our subconscious mind, winning is now good, and we want to seek after winning, and we have greed as a response, and we have unrealistic expectations, and we can also associate pain to losing. We have fear associated to losing. And now when we come to the market, because of that subconsciously stored data, and because of that fear and greed that we've associated to the outcomes of a particular trade, we're now going to be run by fear and greed in that moment. And we're going to have enormous swings in variance, because we're not going to want to lose, we're going to want to win. And it's that wanting to win and wanting to avoid losing that creates variance in our decision making. So what I'm a big promoter of is learning to have awareness over your previous wins and losses, and learning to see that winning isn't necessarily always good. Winning has benefits, yes, but winning also has drawbacks. Winning makes us complacent. Winning closes us off from being teachable. Winning tends to push you down to lower probability setups in the market, taking lower probability setups because now you feel invincible on the market. Winning tends to close us off from listening to the market and we start to project more. So winning has benefits, yes, but it also has drawbacks. And the more you can be aware of that in very specific moments in the past of your wins, then what you start to do is you start to transcend the actual outcome. And you don't necessarily see winning as all good in your mind, but you start to see as the outcome of winning has both advantage and disadvantage, and it starts to become more and more neutral in your mind. So as a trader, you're not necessarily seeking after winning on that individual trade, but you start to become more present with the market. And you start to have less variance in your decision making, because either way, you don't really care if you win or lose in that particular moment. You just want to execute on your trading plan. And you start to go back to your previous losses and you realize that losing does have drawbacks, but it has benefits and it has advantages as well. It makes you more open and teachable. It pushes you to higher probability setups in your trading plan. You become more patient. You start to go off and learn and study more and develop more. It humbles you and you start to become more present with the real market and you learn to listen to the real market. So when we start to redefine what it means to win and lose as a trader, and we learn to transcend the outcome of winning and losing, we have less variance in our decision making, because now we don't want to seek after one and avoid the other, but we're more poised, patient, and present with the real market. And we're less caught up in the virtual market in our head trying to project an individual outcome onto the trade. So that's how we address the roots of variance, by going back to redefine what winning and losing mean to them, to traders. Yes, in that moment when we lose, we may have a momentary state of shame and fear. And we may, in that moment, initially feel as if that loss is bad. But then when we go back to that moment and we make ourselves aware of the benefits that have always been there, but we've been blinded to, we start to realize that, you know what, there's another side to losing. It's not all that bad. And the same in reverse to winning. And then when we start to transcend the judgment on the outcome, this starts to limit variance in that particular moment of decision making, and it ensures that we go back to our process-based decision making. Now, this is a long journey. This is something that you have to work at. It's a skill you have to develop. It's a skill of developing your trading mindset. I talk about this in detail in the 12-week program. So if you want to learn more and have the tools and have one-on-one coaching from me in terms of that, and you truly see the value in doing this and going back and addressing your wins and losses, because that's ultimately what's going to stop you from having consistent profitability, there's a free trial to the 12-week program, so check that out. But I hope this makes sense. You want to go in there and you want to address the root cause of where the variance actually comes from. And then now when you're less addicted to a certain outcome, as a trader, you literally feel yourself being more patient and poised. And you give yourself permission to just execute on your processes as opposed to trying to impose a certain outcome onto the market. And this is what the best traders do. This is what I've seen them do. And again, this is what I mean. Some of them have done it directly through coaching, through proper mindset work. And other traders have just stumbled upon this indirectly. They've been through so many cycles of winning and losing that they realize that the outcome, they don't want the outcome to have a hold on them anymore. They realize that both winning and losing, getting caught up in those polarities of the outcome, is exhausting. All they want to do is just execute on their processes, time in, time again. And you will know if you've made a profitable decision before the outcome of the trade even happens. You'll know you've made a profitable decision, because profitable decisions in the long run are those that are in alignment with your trading plan, in alignment with your edge. Okay, I hope that makes sense. Now, if you like this video, please like, comment, subscribe, share the main takeaways in the comments below. Share these with your trading friends and those that you think will get value from these particular videos. That helps me grow, that helps get the awareness of trading mindset out there. And we also do have a free email that goes out nearly every single day called the the Trading Mindset Mastery Domination email series. So if you want a daily email from me reminding you of the key principles to help you become consistent consistently profitable from a psychological perspective, make sure you sign up to that link in the description, link in the first comment. That's going to be a constant reminder of the principles to focus on as a trader, and it's a good one, so check that out. Okay, thank you for sticking to the end. If you have any questions, leave them in the comments, but I look forward to seeing you in the next video. Cheers.